Yeah, good morning. You risk on or risk off? All right, time to get going. Which means it's time for me to try to figure out where the music's coming from. All right. So good morning. Happy, what is it, Wednesday? Oh my goodness. Let's go. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Therefore, please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Guten Morgen, yeah. My room is my house crooked or is my webcam crooked? That's a little better. So, good morning. So we will get an assessment of market conditions. We can do it technically. We can do it fundamentally. We can do it many other ways, in fact, because economics, monetary policy, macro, is all very long term. But then technical analysis is sort of right here, right now, and recent past. And when you kind of put them together by reading what everyone else is doing, you're connecting the two. Because really what we're trying to do is, as retail traders, is line our trades up with market conditions. You're not going to beat the professionals that have more money, bigger teams, more data, more education, and, bottom line, more money than God. So what should you be doing if your goal today isn't to beat them at their own game? What should you do? Try to figure out what they're doing and do that too. Let them lead the way. Let them be the wave that you ride. So that's what we're going to do. We're using TRADARS and Trader's Way. TRADARS for analytics and decision making, right? Our routine, our framework. You have to have a reliable, repeatable framework to your strategic planning. And then when you click the button on buy or sell, you want it to happen quickly and you want it to happen affordably. And that's where Trader's Way comes in. They use MT4 and MT5. I use MT4 and MT5 charts. Cool, right? So we will use them as necessary. I recommend that you do too. Oh, yeah. Turn market data into confident trading decisions, and it's free. There are some premium things that you can upgrade to, but it's not necessary. And what you get for free will astonish you. That, my friend, I promise you. Cool. We can start on the synthetic currency indices tool, but we're not. We're going to start over here. And I forgot to update before the webinar, so I'll do that while we're looking at this. I think the voice isn't working, right? I forgot to fix that too. Dope! Hang on. All right, so anyways, the longer-term monthly trend remains risk on. Today's session is showing flat and indecisive sentiment as markets digest shifting geopolitical news. 10-year yields are up, and equity indices, what? Okay, Wayne, actually read it. The U.S. 10-year yield has climbed to 4.292, which is pressuring major indices like the Australian stock market and the NASDAQ, while the Iran ceasefire extension drives volatility in energy sectors. So we're back to 90, but that's down a little bit. Gold is up, but still below 48. VIX is at 19. That's down because yesterday it was 20. So we're kind of like where we were a couple of days ago, but there's been a journey along the way. Like VIX above 20 was just troublesome trucks. And if you don't know Thomas the Train, then, oh, you will. Right? Oh, you will. Swiper, no swiping. Wait, no. That's Dora the Explorer. Anyways. Yeah, cool. But do you like how Aiden is reading the news and just, is paying attention to things like changes in the ceasefire? Okay, so let's take a look at this. There's a bull case, a base case, and a bear case. Base case, markets remain in a holding pattern as the U.S.-Iran ceasefire limits oil volatility while yields keep indices range bound. Okay, the catalyst for this would be a continuation of U.S.-Iran ceasefire extension. Cool, so nobody freaks out today. So watch WTI and the dollar. Okay, I think we would like, I didn't do the poll yet, but I think we would all benefit. How about that? If the markets went up, but so therefore we should be more concerned about what if the markets go down. So what is the bear case for risk? A sudden escalation in energy shocks, or Ukraine financing difficulties. What the heck? Could trigger a flight to safety. So what's he talking about here? Rabobank warned energy shocks or Ukraine financing crisis. So he's actually read the news, and this is what Rabobank was saying. So watch gold and USD Swiss franc. The Rabobank report on energy shocks and Ukraine financing is a material risk that could quickly shift the current neutral sentiment to risk off if further negative headlines emerge. Interesting. I don't even know what he's talking about. But, this is why you have an assistant. While I was sleeping, I guess that happened, and he's read it. Interesting. So what about the best case scenario here? Strong manufacturing PMI data from the UK could revitalize growth expectations and lift European equities. The catalyst today would be S&P PMI beat for the UK. Yeah, all right. Watch pound and FTSE. Interesting. And I think he's even updated this if I refresh, because at 7:35, a new report's supposed to come out. Let me refresh. I guess I should probably wait until 7:35 to 7:35. Yeah, see. Keeping equity indices under pressure remains relatively stable despite a boost to safe haven alternatives. So look at this. The bull case has increased. And look at this. All the analysis has changed from a half an hour ago. Now the base case is only 45%. Markets remain range-bound as investors await the EIA oil inventories. Yeah, okay, cool. It's neat, right? So every 30 minutes at 05 and at 35, he reads all the news, looks at all the economic data, analyzes, using risk radars and a whole bunch of the other tools on the app, and then rewrites this report for you. Bear case is only 15%, right? News risk assessment. No material changes detected. Cool. It's neat. So it's completely different from a half an hour ago. Okay. Crude oil and high yield bonds are down. Ethereum, platinum, and Bitcoin are up. So yeah, that smells like it's trying to be risk on today, right? Like VIX being down. That's good, isn't it? Yeah. Bitcoin up, that's good. Gold up, that's good. Oil down, that's good. Dollar flat, could be worse. Let's get a headline update. Why is it not reading? Here
ECB Simcus. Central banks shouldn't raise interest rates in April.
Dude, it's slow. What's it doing? Kick the machine.
US dollar,
There we
short
go.
yen. Testing highs, but momentum still muted. UOB.
Wow.
Euro US dollar price forecast. 61.8% FIBO retracement at 1.181825 remains key barrier. Australian dollar US dollar. Growth index softens but flows turn supportive. BNY.
Pound US dollar nudges higher on UK inflation as firm US data restrain pound.
UK stocks. Mostly subdued in cautious trade.
Dollar weakens as ceasefire extension hits safe haven appeal.
Bitcoin price forecast. BTC surges above $78,000 amid US-Iran ceasefire extension. US Treasury buyback plan. ECB's Simcus. Central bank shouldn't raise interest rates in April.
So this was neat because yesterday I was watching the testimony live, and I was watching it on Bloomberg. How nice is that? Thank you, Bloomberg. And chatting along with people. So this is the testimony, right? And he was talking about mission creep from the Fed and stuff like that. So I was chatting along. And he said the central bank the central bank shouldn't be worried about things like climate change. And I said, yeah, and the EPA should not be concerned with monetary policy. Yeah. And then one of the senators was criticizing Fed policy for high gasoline prices. And I responded, Senator, gasoline prices are up 20% because of a supply shock, not the Fed policy. That was my answer, but he didn't quite say it that way. Then a lot of focus by Warsh was on reducing the Fed's balance sheet, because when he started it was 800 billion, and you know, after COVID it was 7 trillion. Oh my God, right? Like, that's a whole magnitude. So I'm like, yeah, killing quantitative easing is probably good. And then they were talking about how would you grade the economy? Would you grade it an A or a B? And he didn't want to say B, but he said there's room for improvement. So anyway, so I'd call that a B plus plus. And then some of the senators and the chair of the committee were joking about their different universities, and they were talking about Morehouse. Well, Morehouse is here in Atlanta, and I wasn't sure if people paying attention know what the conversation was about. And
Oil inflation shock may hit harder than that from COVID.
Because one senator was saying to the other, yeah, you couldn't get into Morehouse. And he's like, yeah, well, you know, and the inside joke there, which they weren't saying, was actually a race joke, I believe. Because Morehouse is a good university, there's no doubt, but it's a historically black university, and so it was banter. Now, between friends, because they've known each other a long time, but one is black and one is white, and so anyway, so whatever. So I popped that up, and so we're just paying attention, and then it turned out that the sea stocks in Pakistan were canceled. We got that instantly off of the news feed, and so I posted that. JD Vance is not going to Pakistan. So it was really cool to just like be live with my team. So we're flat right now. Slightly risk on. Long term, risk on. Short term, meh. But we have a lot of news today. We have a lot of news. Yeah, and part of it is earnings. So right now, we're slightly risk on, but we're cautious, but we're risk on. And we need signs throughout the day, almost minute by minute, to confirm that we already know some of the assets are pointing to risk on. Some of the assets are not risk on yet. So we want to look at these, 78 variables and say, well, what's the rest of the market doing? And throughout today, we may find that the rest of the market does go risk on. The stock market does go up, for example. Oil does continue down below 90. Maybe we're back down into the 80s. Maybe VIX drops back down to 18. Maybe Bitcoin drops to or rises to 80, And it's just what we know is it could happen. It just hasn't quite happened yet. We also want to see treasuries drop. Is that happening? Actually, treasuries are rising. So that's why we have a slightly mixed bag, aka neutral mixed. But your goal is to see the turning towards the direction that appeals to you. So if you're risk off bear, you want to look for this to turn negative, which shows you that the other assets that were slightly bullish are now bearish, or I should say risk off. Right? And so either way, you need to see the turning point. Right now, there's no evidence of truly risk on or risk off now. So you want to be able to measure that before you put money in the market. Cool? Hoorah! Cool. So you are risk on or very risk on. Okay. 25% are risk off. Okay. That's fine. I understand that. So this is what you guys need to, one thing that you need to be using to analyze when to, get going, when to get on with it. Right now we are still new. Cool beans, right? Yeah. Yeah. And now we'll go to the index. And while I have that, let me hang on. I forgot. I wanted to share with you. I'm going to be at this conference. Will you please click the link and check it out? I'd like for us to get together if possible. But would you please click the link and take a look? I'd appreciate it. It would help me if you click the link. And if you go, let's find an opportunity to hang out. I went to the one in Vegas, had a fantastic time. And then 22 days, 4 hours and 8.5 minutes. But I'll tell you, one of the things I did, it was great. I was on stage, and I have the mic in my hand, and there's a crowd there. And then I'm like, hey, I am going to walk out I'm going to walk out of the room, and I'm going to go to the cigar bar, right outside the expo. And if anyone wants to talk with me about trading and investing and about money management, come with me. It was great. So I just hung out with traders. And the traders talked amongst themselves as much as they talked with me, which is fantastic. So, dude, I had a really good time. And then we went out for dinner and a bunch of other things. And yeah, it was great. Yeah. So, click the link, please. Check it out, even if you don't intend to go to Dallas. You're like, I don't want to go to Texas, or I live in Timbuktu. Click the link anyways. Check it out. Get involved in the industry, yo. And I've been working with Money Show for about 20 years. So they're friends. All right. So, what do we know? Ooh, that's interesting. Dollar. Whoa. Dollar moved just in the last half an hour. Jiminy Cricket. That's interesting. And yen has moved. Swissy's moved. Wow. This is way different than, I don't know, an hour ago? It's very interesting. So right now, Kiwi Swissy long and Kiwi Euro long are your best trades. What do you think about that? And dollar went strong, so that's going to lead toward risk off there. But right? But Kiwi Swissy is typically a risk on scenario. That's interesting. So look at how much this has changed. Like, I'm telling you, this was like number 7 or number 6. It was very weak, and all of a sudden, boom! So did we get some news while we were talking? Let's go to this radar.
Fed, wash risks and delayed cuts. Commerzbank.
Oil inflation shock may hit harder than that from COVID.
US dollar, yen. Testing highs, but momentum still muted. UOB.
Euro US dollar price forecast. 61.8% FIBO retracement at 1.181825 remains key barrier. Australian dollar US dollar. Growth index softens, but flows turn supportive. BNY.
Pound US dollar nudges higher on UK inflation as firm US data restrain pound.
See, that shows dollar weakness, right?
UK stocks, mostly subdued in cautious trade.
Dollar weakens as ceasefire extension hits safe haven appeal.
Well, yeah, see, like 33 minutes ago, this news is showing relatively weak US dollar, and boom! We're analyzing this in real time. And so something has changed just very recently to make the dollar quite strong. What a cool tool, huh? Look at that. It's going to turn into the number 1 strongest currency. It's going to go from like number 7 to number 1 in minutes. Damn, boy. That impacts this, huh? Yeah, look at a lot of dollar pairs turning bearish. Yeah, look at euro dollar's going to turn the most bearish. Wow. Dude, this is crazy good. Look at that. It's going to take over. Well, there you go. Okay, Trump set a new deadline. Cool. Boom. Look at that. Just like that. In just minutes, we've gone from one of the weakest to the strongest currency, and we just watched it in real time. Now, to calculate this, we have to look at 7 different currency pairs and analyze them in real time. and then create an index out of it. So this is actually an entire table to get this data, and we just watched it all happen in real time. Whoa, dude. Dude! So, yeah. USD Swiss franc is right, and euro dollar down, USD Swiss franc up is the name of the game. Do not trade Kiwi dollar. That would be dumb. Yeah. And that's an insult to dumb people. So if you're in that trade still, it may be dumb, but you should know better because you're not dumb. Yeah. You should know. But look at that. That's crazy. Nice. What? Oh, you're kidding. I did a massive update to this spike radar. What? Oh, and I'm kicked out. All right, hang on. Maybe that's what it is. It needs to go through that. Where's my... Okay, where's my code? Give me my code, Bubba. There's my valid verification code. Okay. That's nice, right? Yeah, it's nice. Boop, boop, boop. Doo, doo, doo. Okay, spike radar. Calibrating. There we go. That makes more sense. Okay. Oh, well, you didn't display this correctly. Okay, well, okay, but you can see where we're going. So is there really nothing at 8:30 today? I thought, isn't today PPI? I'm going from memory. Is that tomorrow? No, it should be today, right? I'm going to ask him. All right. So it's not supposed to open full screen like this. So we'll fix that. But it shows you what we do. Oh, and he's not drawing it because that actually he's not even supposed to be doing this analysis on EIA, which is interesting. But what it is showing you is it's not a big market mover for Forex. Now, maybe it moves oil. I decided to not put commodities in there. Now you say, well, Wayne, you have the Dow, the S&P 500, and NASDAQ. That is true. But because I don't want to overlap pips with points, I've taken it out of the calculation. So the spike itself is at Forex, and then it's looking at the Forex pairs and then telling you which one moves the most. Okay, but I thought you would still want to know the analytics here. Okay. So for some reason, Dow moves more. But again, it's in points and not pips, so maybe that just ends up being the same value. But oil would be the thing. Okay, no, PPI is not today. Yeah. Yeah, okay, so yeah, he's not even supposed to do this analysis. But one thing you might find interesting, I have to double check this, but the historic chart here, all that kind of stuff. So I'll have to check this because he's not even supposed to be doing this type of analysis for this event. I want some, but not that. So, whatever. What else is on the calendar? So that's at 10:30, right? Yeah, 10:30. And so watch oil because watch WTI around that time because it's likely to move. And oil inventories down is going to drive oil prices up. Okay. Oh, yeah. And then I want to go down here because it's expanded. It's not supposed to be. Tonight, PMI out of Australia, then PMI out of Japan. Then we have PMI out of the Eurozone. And then we have PMI out of the UK. And guess what? We have PMI out of the United States. Maybe that's what I was thinking about Thursday, Canada PMI, PPI. Cool. So we got a lot of PMIs. One of the things I was thinking about is taking our PMIs and tracking them here. Because crypto today, Bitcoin, Ethereum, XRP advance breakout after U.S.-Iran ceasefire extension. Actually not.
South Africa inflation rises to 3.1% in March.
Where's that coming
Euro
from?
US dollar. Range-bound outlook with policy risks. Societe Generale. Factbox governments. Worldwide shield households from rising energy costs.
I don't know where that's coming
Fed,
from.
wash risks and delayed cuts. Commerzbank.
Oil inflation shock may hit harder than that from COVID.
US dollar, short yen. Testing highs, but momentum still muted. UOB.
Interesting. I don't know where that's coming from. I got a page open somewhere. Sorry about that. But going back to what I was talking about, it might be interesting to compare manufacturing and service PMI amongst all our economies. So we would do that on not this table. Where did it go? No. Okay, Aiden has moved it. We have a table. I think it's supposed to be somewhere. Maybe he's put it down here. No. Anyways, we have a table in the back office, if you will. What we call something G10 macro something. And so we look at all this data, in particular interest rates, jobs, inflation, GDP. Okay? Specifically. I think we have enough data that I can add the services PMI for all our G10 and our manufacturing for all our G10 and track the trends in those and do comparative analysis in those. And might also give us a cool, complete picture. And then we can do that analysis in here where we can compare like the manufacturing sectors of Australia and Canada and the service sectors of Australia and Canada. And of course, in the change and the rate of change and the trend of the change can all be analyzed in there. Cool. Seasonally, this is usually falling. Shows you how unusual things are right now. Hey, look, Jim. Bullish, bearish, bullish, bullish. Thank you, Jim. All right, let's get back to the sentiment, figure out what's going on in our world. Okay, this is going to come back up. All right, the other thing I wanted to show you is the new look. So look at this. Kiwi has overtaken dollar again. So what'll happen is 1 minute before the news is about to come out, you're going to get a spike alert. Now, for the most important stuff, the market movers and important stuff, right? You'll get an alert like this, a big pop-up, and you'll hear my voice saying, S&P Global Manufacturing PMI coming out in 1 minute. And it'll show you the forecast and the previous one. Okay? Then it'll turn off, and then it'll turn on, because it's actually got to go through a cycle of grabbing the data. And then it'll show you what was forecasted, show you the actual, show you if it was a meet or a meet, beat, or miss, show you the delta, and show you what pair to trade based on that specific result. So now it'll look at all the UK PMIs, look at all the ones that were misses, and then look at all the currency pairs, and then tell you which one what pair has performed best in that scenario in the past, and give you the direction and the average move. And what this window will stay up for 5 minutes or until you close it, and it'll close automatically in 5 minutes. But while the news comes out, it's showing you the change in real time in the currency markets. Dude. So this is what I did last night. Yeah. This is what I do to make you a success. I wake up at 4:30 in the morning and I work till 10:30 at night. So what we can have something like this, dude. So while you're farting around doing your normal routine, all of a sudden, boom, you're going to hear Wayne, hey, spike alert, S&P Global Manufacturing PMI from the United Kingdom coming out in 1 minute. You're like, oh, really? Yeah. And now you're like, dude, you should be watching that pair. Or you can use this and just see really Kiwi Swissy long and dollar Swissy long, euro dollar short. Okay. Euro Kiwi is a trade. You'll see all of this in real time. What has been and what is all in real time. I want to make the best trading calendar in the trading and investing world. I think you care about what S&P 500 Global Manufacturing PMI even means. You're like, Purchasing Manager Index? Dude, why do I care about that? Well, you probably don't. But would you like to know that under this situation, USD yen typically moves about 50 pips, in this case, fall in the past? Well, right now, it's not likely falling because dollar's strong and yen is neutral. Okay. But that's what's happened in the past. So things may change. Or would you like to know that the market just got volatile? Do you want to know what is actually happening right this second? Or do you want to just guess or keep doing what you habitually do? Do you want to habitually trade, or do you want to compare strong versus weak in real time? So anyway, so I don't want a calendar of stuff you don't really care about. I want a calendar of what's going to impact the market right now, and can it potentially change what the market is doing? But it's cool, right? Isn't that cool? Isn't that cool? Oh my God. Not bad for free. Huh? Would you guys like that for free? Yeah, sign up at traders.com. It's free. You're welcome. Dude, it's cool, right? Yeah. So anyways, I'll clean this up, but that functionality is working. Okay? The functionality is working. But for some reason he's doing analytics on the wrong things, and this isn't supposed to be expanded. It's closed. I'll get that. But the awesome part is work. So that was an example. And so you'll get that type of thing on major events. And that's my definition. Major is GDP, CPI, interest rate decisions from all the G10. We also track X minus M, so that's balance of trade. So you'll get those, but there really isn't a spike. I don't expect spikes to come out of them. So Wayne, why provide a spike alert for that? Well, because those big spike alerts, I want to have at least 3 years of analytical data so that I can track the change based on historics, changes in imports and exports from every G10 country. How do you go about swing trading with the frequent changes in the currency string? Oh, I got you. So you go to index and you go to 7-day. Done. Or you can use the 30-day if you prefer. So you're like, you want to buy euro dollar long term. Okay. Just don't do it today. Don't do it now. Huh? It's good, isn't it? Not bad for free. All right. Where we go? Boop. Boop. So swing on by, everybody. Let me put in the link. Cool. So there's that big upgrade going on in the spike radar. I'm more of a swing trader and position trader. And in my endowments that I manage, position traders, right? But I scalp into my day trades and I day trade into my swing trades. But it's one of these things, and I talked about it yesterday. I would never try to make 25 pips. If I made 25 pips on a trade, it's because I moved my stop and got knocked out, and I'd be very disappointed. So I wouldn't call myself a scalper anymore, even though I did that for, a year. For 1 year, I tested myself. See, back in the day, things have changed a lot, right? But back in the day, it used to be common knowledge that you can't trade the 1 minute chart. And one time I was in New York City hanging out with traders that trade the 10-second chart that I think Oanda offered it. See, I've been hanging out with traders as long as I've been a trader. So that day I happened to be on Bloomberg television. And so I was stuck in New York City, and I sent out an email to the community, and I'm like, hey, who wants to meet up for cigars? And so like 10 or 12 people showed up, and they were not even paid members of FX Bootcamp. They were just traders, and I'm like, that were on my email list. I'm like, cool, whatever. So we went down there and we smoked cigars, and we were talking about their 10-second charts. It was interesting. But none of them were successful. So I somewhere around there, I can't remember quite the timeline, but I spent 1 year trading the 1 minute chart to see if it was true. So I can scalp. I'm capable of it, but I just find it easier to let the winners run and make pips while I sleep, right? Than just make more and more and more trades. But I still know how to enter with precision, or at least how to try to enter with precision. So if I want to be long for a week, I'm still going to enter in on a 5-minute chart. I'm just not going to get out in 20 minutes. I'm going to get out in 20 days. You see? So every trade I make is a scalp. Or in your definition, every trade I make is a day trade. That's why I do things like, okay, I want to be long euro dollar, just not now. But if this turns so that, right, dollar is weak, which it's not, and euro is strong, which it's not, then I can grab the trade, and then I can hang on for dear life. Yeah. Cool. To me, the biggest thing is making the decision. Like, how do I make the decision? Is it just this? No. And that's what I'm talking about in Dallas in 22 days. I'm talking about using a quantitative process before even looking at your charts. And then looking at your charts is the easiest part, right? So again, please click the link, check it out. Even if you can't go, Money Show would appreciate it if you saw the things they're doing. So I was in Vegas, had a great time. I'm doing their Dallas one. I think I'm going to be in Florida this year doing their Money Show Master Symposium there. And I might be back in Vegas, I think. So I'm doing about 5 of their shows this year. And I started working with them 20 years ago. I used to go to Vegas and New York City. I think New York twice a year and Vegas twice a year. And I think Chicago once or twice. So anyways, let's get back. Wrong. So we did our spike and go back to today. If you want to filter out the noise, just go to the 7-day. And Kiwi and Aussie have been more stable. So this idea of, are you a swing trader or a day trader? Okay, you could still, even though the markets are freaking out on this particular headline might change. That's what swing trading is about. So dollar strong, and you saw dollar went from weak to strong in a matter of about 5 minutes, and we watched it together in real time using our synthetic currency indices. Cool. So you're still best off looking for Kiwi and Aussie long, dollar and yen short. That's still the trend, where this could be the noise and these are the trends. So all we know is what's happening right this second, basically based on what's happened in the news in the last 20, 30 minutes. It's just not a good time to enter these trades. Kiwi yen, maybe. Kiwi dollar, definitely not. Aussie yen, maybe. Aussie dollar, definitely not. You're trading the pound? Why? Oh, well, the PMI news came out. Yeah, well, nothing's happening, bro. Nothing today and nothing this week. Why are you trading the pound? I'm British. I like it. Huh? Pound is moderate over the month, but just the last 7 days, pound hasn't been doing anything. Ah, look, I just noticed too. On the daily for the pound, he's using 7 pairs, and then you switch here. See? And he's only got 4. Now, this is interesting. So now I have to think, okay, the way it's been designed is he's treating them as 3 different things instead of just doing it once and changing the time frames. All right, there's probably a more efficient way of doing this, especially since it's so sensitive. Yeah, that is the plan, Prince. Yeah, but they're still on Investor Bootcamp. But I think what I want to do is, and I'll probably have time to do this next week. I think what I want to do is make Traders Way so attractive to work with that it would be irresistible for you not to. So I worked out an agreement with them. If you trade through them, they give some of the, instead of paying me a commission, they give you the commission. Think of it that way. So every time you make a trade, a little bit of the spread, the cash, so you get a portion of the cash, that you get cash back. And not and actually as cash, not equity, as cash back into your account. Cash you can withdraw, like actual real cash. Okay, that's cool. So your spread is reduced. And it's all automatic. So every day, so if you made 5 trades, you get, 5 times and you get 5 commissions. Because I don't know, you earn the commission instead of pay the commission, but whatever, you get some cash back. So that's good, right? Yeah. The next thing I thought would be to give you all my chart templates for free. So you get a trustworthy, ethical foreign exchange broker that I've been working with for 11 and a half years. You get all my charts, and trading is cheaper. I thought I had one other idea too, and I don't recall what it was. But anyways, that's where I'm going. So maybe, Prince, I can have that set up for you next week. So you have TRADARS and Traders Way, combination made in heaven. And your charts will look like my charts, only less messy. And also, you guys don't have this template. I'll have to include that in the, right? Because some of you have requested it. And this is something I made before Investor Bootcamp. No, but our other partner for that would be the same deal. Yeah. So you'd get the same rebate and you'd get the same chart templates. So I have a program for U.S. traders and international traders. It's just how regulations work. So all right. Yeah. Where do we want to go from here? Which is the way that's clear? Still looking for that blue jean, baby queen. Yeah, yesterday in our afternoon live stream inside of TRADARS, we were getting better at using these prediction markets. What were we talking about? Japan, right? See, and I'm like, this search feature is really good. What is, when you look at money being put to work, okay, these are, everyone in this analysis has voted with money, not opinions. Okay, so based on money being put to work, there's a 98% chance the Bank of Japan does not change interest rates at the upcoming meeting, which is next week, right? Yeah, in 6 days. However, 67% chance that the Bank of Japan raises interest rates by 25 basis points 55 days from now. This is a drop in 3.9%, and I can confirm this because I believe just last night when we did this, it was like 72% chance they were going to raise. There's less of a chance based on money. We're analyzing money flow. Okay. There's an increase of no change and a decrease of a rate hike just in the last couple of days. And you can sit on this. By the way, this is cool, isn't it? Dude, I know it's cool. And so you can sit on this if you're, you can wait to ask me, hey, Wayne, what do you think about monetary policy in Japan? Great. You can ask a YouTube guru. They probably don't know anything about the Bank of Japan. Or you can just read the markets. And I've made this as easy as you could possibly make it. 2/3 of the market thinks the Bank of Japan is going to raise in June. But that is waning. Cool. Well, isn't that smart? Yeah, it's cool, right? Oh, so you have Japan. But do you have Argentina? Yeah. Oh, but what about the rupee? Yeah, Indian inflation. By the end of the year. Yeah. Well, that actually, it's funny because now you can say, oh, there's 265 days left in the year. Is this day 100? Oh, snap, knuckles. Hope you hit your goals. So I'm going to broaden this and also practice, right? Okay, so in 7 days at the Fed meeting, there's a 98% chance Powell says good morning. Okay, we don't need stuff like that. Yeah. Oh, this is new. Let's isolate it. Kevin Warsh cuts rates at his first Fed meeting. Well, we don't even know if he's going to have a first Fed meeting this year. Will he cut rates? No. That's interesting because the Democrats are terrified of him cutting interest rates. Oh, and it just updated. All right. I don't need the whole page to change. So this is cool, right? It's a way to read how the market feels. So politicians and the media are freaking out that Warsh is a puppet boy, right? A sock puppet. And he's going to go in there and slash interest rates. And they actually, if you watch the interview, the testimony, they were talking about Warsh cutting interest rates of 1%. Dude, when did he ever say that that was a plan? Dude, it's so far-fetched. It's more on the crazy side. Cutting interest rates of 3. Okay. But to 1? Dude, you're worried about the sky falling. What the heck? But anyways, so you're hearing from politicians and you're hearing from the media that there's a real risk in the world that Warsh is going to be nominated and he cuts interest rates to 1% and pushes inflation and affordability to extremes. But professionals don't think that's true. There's calm in the market. They're like, dude, that's so stupid. Good. Well, how do you like that? We have a bullshit filter for you now. So now we can watch this for a while and just, this is another way to read market sentiment. Oh, is that why it's on the sentiment tab, Wayne? Yeah. So anyway, so now that I'm getting used to using what we built, I got to clean some of this up because a lot of it's redundant. But I also want to add stuff. Yeah, so we have Japan, we have Canada. That's cool. UK. Britain, no. So, right, do we have gold? No. Do we have Bitcoin? No. Okay, so I think we can add to this oil. No, WTI. Okay, so I think we can add to this. So maybe I can, now that I'm getting better at using it, I can refine what we do. Oh, South Korean annual inflation. But I don't really, do we care about annual inflation? Maybe. Oh, yeah, forgot about, oh, look at, well, ground beef. Oh, we got Brazil. ECB, that's interesting. ECB interest rates in June, 50 days from now, 50% chance of a 25 basis point hike. Interesting. And 43% no change. Because it could be more than 20, it could be 50 basis points, but only 1% think of that. So, cool. So, no move until for the next 50 days, right?